Financial analysis. What is financial analysis? Financial analysis is the process of evaluating businesses, projects, budgets, and other finance-related entities to determine their performance and suitability. In corporate finance, the analysis is conducted internally, using such ratios as net present value, NPV, and internal rate of return, ER, to find projects worth executing. A key area of corporate financial analysis involves extrapolating a company's past performance, such as gross revenue or profit margin, into an estimate of the company's future performance. This allows the business to forecast budgets and make decisions based on past trends, such as inventory levels. In investment finance, an outside financial analyst conducts financial analysis for investment purposes. Analysts can either conduct a top-down or bottom-up investment approach. A top-down approach first looks for macroeconomic opportunities, such as high-performing sectors, and then drills down to find the best companies within that sector. A bottom-up approach, on the other hand, looks at a specific company and conducts similar ratio analysis to corporate financial analysis, looking at past performance and expected future performance as investment indicators. What it is used for. Financial analysis is used to evaluate economic trends, set financial policy, build long-term plans for business activity, and identify projects or companies for investment. This is done through the synthesis of financial numbers and data. Typically, financial analysis is used to analyze whether an entity is stable, solvent, liquid, or profitable enough to warrant a monetary investment. Vertical analysis. This type of financial analysis involves looking at various components of the income statement and dividing them by revenue to express them as a percentage. For this exercise to be most effective, the results should be benchmarked against other companies in the same industry to see how well the company is performing. Horizontal analysis. The horizontal analysis involves taking several years of financial data and comparing them to each other to determine a growth rate. This will help an analyst determine if a company is growing or declining and identify important trends. When building financial models, there will typically be at the last 3 years of historical financial information and 5 years of forecasted information. This provides 8+ years of data to perform a meaningful trend analysis, which can be benchmarked against other companies in the same industry. Some very important key figures. Profit ratio equals EBIT times 100 divided by revenue. Show how much profit the company is earning out of its revenue. Profit ratio should be as high as possible. Capacity ratio equals gross profit times fixed costs. Should be more than 1 to secure the gross profit can cover the fixed costs. Return on equity equals profit before tax times 100 divided by equity. Should be as high as possible and compared to the interest rate from state bonds and bank accounts. Gearing ratio equals total liabilities divided by equity. If it's high, it could be an indication that the company is running high risks. Assets turnover equals revenue divided by assets. Should be as high as possible to show that the company is efficient in its use of its assets. Liquidity ratio equals current assets times 100 divided by short-term debt. A very important figure indicating if the company is able to pay back its short-term debt. If it's less than 100, the company really has a problem. The acid test ratio equals current assets stock times 100 divided by short-term debt. It gives an even more precise indication of the company's ability to pay back its short-term debt. Should be more than 100. Solvency ratio equals equity times 100 divided by total assets. Bank look very detailed on the figure. If you need a bank loan, the ratio is expected to be at least 25%. Return on investment equals net profit divided by total investment times 100. Example of using financial analysis on a company, Areva. Here you can see the brief overview of the company. The company Areva is world-leading company in nuclear energy. Its activities are mining front-end, reactors, and services, back-end, renewable energies. Competitors of Arave are Siemens AG, Rosatom, and Schneider Electric. Consolidated sales revenue of €9,342 billion in 2012.